Are you worried about losing your crypto to hacks or scams? Are you wondering if governments will ban your favorite coins overnight? Maybe you're frustrated by the wild price swings or confused by complex crypto rules. If any of that sounds familiar, you're not alone. That's why the EU introduced MiCA, a new regulation designed to protect investors, bring transparency into the market, and make crypto safer for everyone. But what does that really mean for you, now that MiCA is fully live? In this video, we'll explore how MiCA could reshape the crypto world and whether it could actually solve the problems we all worry about. Before MiCA, crypto asset regulation was largely uncoordinated across member states. Different approaches and legal definitions lead to uncertainties for market participants. As crypto markets expanded, high-profile incidents highlighted risks such as fraud, market manipulation, and operational instability. The EU introduced MiCA to address these issues by setting uniform standards on transparency, disclosure obligations, authorization, and supervision. MiCA seeks to strike a balance between protecting consumers and ensuring the EU remains attractive for crypto asset issuers and service providers. Policymakers emphasize that regulation should not stifle technological progress, but rather create a safe environment for further development. By harmonizing regulations, MiCA aims to position the EU as a global leader in responsible crypto innovation. MiCA defines crypto assets broadly as digital assets that rely on cryptography and distribution ledger technology. This covers most types of tokens, including utility tokens that grant access to products or services. MiCA imposes disclosure requirements on issuers, demanding clear, fair, and not misleading information in white papers. Stablecoins are classified under MiCA as either asset reference tokens or e-money tokens. ARTs reference a basket of assets such as commodities or multiple currencies. EMTs, on the other hand, are backed by a single fiat currency. MiCA prescribes stringent capital and reserve requirements for these tokens to mitigate systematic risks and protect consumers. The regulation introduces a licensing regime for CASPs, which include trading platforms, custodians, and brokers. CASPs must secure authorization to operate within the EU and comply with conduct of business rules, capital requirements, and operational resiliency standards. By aligning licensing requirements, MiCA seeks to enable cross-border operations under a single authorization, similar to the passporting regime in EU financial services. Under MiCA, issuers of crypto assets and CASPs must apply for authorization with national competent authorities. Supervision will be split between national regulatory bodies and the European Securities and Markets Authority, ESMA, for significant tokens, especially large stablecoins whose failure could affect financial stability. This dual-level approach allows for uniform enforcement and safeguards market integrity. Issuers must present a white paper containing essential information on the project, token functionality, governance structure, and associated risks. The regulation stipulates standards akin to prospectus rules in traditional securities law, aiming to provide investors with accurate and comprehensible data. Significant changes to a project's roadmaps also require updated disclosures to maintain market integrity. To ensure their solvency, stablecoin issuers must hold adequate capital buffers and establish sound governance structures. MiCA mandates maintenance of reserve assets commensurate with the tokens in circulation, verified by independent audits. Moreover, issuers must disclose how redemption rights and stabilizing mechanisms work so that token holders can make informed decisions. CASPs face stringent rules on market manipulation, insider trading, and other abusive practices paralleling traditional securities market safeguards. They must segregate client assets from company assets to protect consumers against insolvency risks. Furthermore, new internal control requirements obligate CASPs to manage conflicts of interest, ensure proper record keeping, and establish complaint handling processes. MiCA was formally approved by the EU Council in 2023, with an 18-month transitional period after its publication in the EU official journal. Stablecoin issuers had a shorter window to comply, reflecting the emphasis on regulating tokens with a higher systematic impact. Crypto firms operating under existing national frameworks benefited from transitional provisions, but still needed final authorization to meet MiCA requirements. Following these steps, MiCA is now fully in effect as of December 13, 2024. With MiCA provisions now live, the European Securities and Markets Authority continues to develop secondary legislation and guidelines to clarify technical details. Market participants must ensure they are fully aligned with MiCA's requirements, including capital buffers, disclosure processes, and corporate governance frameworks. This comprehensive compliance effort is crucial for companies looking to maintain or establish a legitimate foothold in the EU crypto market. The Markets in Crypto Asset Regulation (MiCA) is the European Union's comprehensive legal framework designed to regulate the issuance, offer, and provision of services related to crypto assets. It aims to create legal certainty for crypto asset issuers, enhance investor protections, and safeguard market integrity, while also fostering innovation with the emerging digital finance sector. By harmonizing rules across EU member states, MiCA prevents regulatory fragmentation and lowers compliance costs for business operating through the EU. Now that MiCA is fully live, it brings the EU one step closer to a safer, more trustworthy crypto landscape. This harmonized rulebook addresses core investor concerns, such as security risks, sudden government clampdowns, and disjoint legislation. By creating a unified regulatory framework that mitigates fears of arbitrary bans or inconsistent rules across different European jurisdictions. For many, MiCA's enactment represents the relief they've been waiting for, legitimizing the market and establishing guardrails to protect against worst-case scenarios. However, MiCA isn't a universal remedy for every crypto-related challenge. Digital asset volatility remains inherent, and areas like DeFi might still need additional regulatory clarity. Overregulation could also hamper innovation if policymakers fail to adopt MiCA's requirements to fast-evolving technologies. Nevertheless, MiCA's newly enforced framework strikes a balance between consumer protection and industry growth, setting a strong precedent for how crypto can evolve under a cohesive, carefully designed, and regulatory regime. If you are looking to trade, invest, or build crypto projects more confidently in Europe, MiCA could be the blueprint you've been seeking.